Hello everyone, now let's have a look at US30. So this is the beauty of the US30 strategy. You are not looking to be correct, you are not looking to get every move. All you're focusing on is your key time that you're available. You're looking for the right confirmations and then you get in a move and get out. You make your money, you're on the chart, and then you're done for the day. Usually it's a small amount of time you're sitting at the chart, but it repeats over and over again, so those wins rack up over time. That's why you don't have to be right all the time. Links all in the video description. A few days ago I done a template video with all the templates in, and that's on the YouTube channel. If you do want a more in-depth strategy playlist to learn exactly what the strategy is, you can message me on Telegram or look at the playlist on this channel. They'll all get you to the right place where you can learn it. These videos I put up every day are recapping the previous day. So this is what we had from the last video. We left this bias on. We could see that things were bullish and we was looking for a continuation towards the upside. And we was looking for levels from the US holiday that took place, which was the previous day, and them key levels will be used on the next day to propel price in one direction or the other. And this was our bias because price was bullish. We was looking for that bullish momentum to continue, but as soon as price opened, got pushed down back into our discount buy area and it consolidated. So that was not correct. That's why you don't have to be correct to make profit, because all I was doing is forecasting the future. But in reality, all you do is wait for today. And we focus on the New York Open as always. So we have some levels to put on. So let's just do that now. This is the New York Open, 2:30 UK time, and that is on that candle there. We also have a template for the early trade, which is the pre-New York. So we had, and the high volume time, which is those two lines, and that is at 1 p.m. UK time. So that's on that candle there, which shows us 1500 hours. Then we go to 30 minutes later, which is there. So here we are. So those are the pre-New York high volume time. Then we got the New York Open here. So now we can change that colour to a liquidity line, which is orange. Just like that. And then we can use that in a minute. So what we have to do first is we would just prepare. So by this time of the pre-New York, we have a push down back towards this discount buy area from yesterday before the US holiday. Is already taken the US holiday liquidity, previous lows. The previous day we got the New York Open here, pushed down, discount buy area was created and they continued to buy. So this would be in grey running along there, because that was the lowest point during the New York session on that day. New York traders came in at the open, pushed price down, took liquidity and continued to buy, and with a retest of the New York Open level here. Are there any other levels we need to draw along? So we can take this one here. We can put that in blue too. So that is the New York Open from there. Let's just put that on like that to indicate where the New York Open was. So now we can go to today. And what you can see, let me move that arrow. You can see this price action was moving into the discount buy area from this previous day. We have the New York Open that would have took place up here, like that. So that area is likely to be retested today because they normally retest the New York Open. So now price comes in to this discount buy area. These are the previous New York, pre-New York and high volume time. So price comes into it. Here today is the pre-New York. and you can see pre-New York opens, pushes down, takes the Asian session low, which is an orange line, which I've got to do again. Takes that low, comes into the discount buy area from the previous day over here, and then you get into the buy and start rejecting. So this is an early entry buy. That is on the rejection of here, and you can even see here we get a push through, retest of that level, and a continuation towards the upside. So that is an early entry buy. What you'd be targeting is previous highs. Nice and simple. Previous highs, previous highs. This is the Asian session high up here. So that would need a line like that. That is that move done. You've got one trade attempt there. That was just after the pre-New York, and we hit the Asian session low in a discount buy area. Got the reversal towards the upside. Nice and simple. Managed it well. Then we go on to the New York Open. And the New York Open shows as look out for a push towards liquidity, key level. Then you get the reversal. So as the early buy had already pushed down and now is pushing towards the upside, that is targeting a liquidity pool. Now the New York Open here takes place, it starts pushing up. This generates another trade attempt, because if you look for the holiday day, which is here, that runs along here, you also have an Asian session high, which is double confirmation. So you have a liquidity pool and a key level from the previous day. So on this big rejection here, you can get into the sell, and what you'd be targeting, well, you'd be looking for a sell as soon as the Asian session high had been taken. So let's go down to the smaller time frame so we can look at that in a bit more detail. Let's go. You can look at it on the 1 minute, but let's just go. You can look at it on the 5 minute, but let's just go down to 1 minute so you can see every single thing. The New York session opens, pushes up, and then after this area, you'd be looking for rejection. So as price starts coming down, you get into the sell, stop loss at the high, and you just follow it down. As price comes down, you aim to target the New York Open, because that is the main area you would be seeing the first level of bullish support. That is a trade template. So as price C comes down, you would take partial profits, move to break even, and let it play out. On the break of the New York Open, it's another confirmation that price is looking weak and likely to continue down further. Now it's up to you what moves you trade, but I don't like to go too much on the stress, because I will focus on this reversal only. I wouldn't be looking for a buy from here, because a lot of the time like this, you can get a buy, you can get a retest twice, and then it drops through. So there's normally too much wiggle room here before it actually starts buying or breaks. I like to get a quick reversal, then it starts dropping, because that would give me the best entry and the quickest result. If I start to buy down here, price can bounce along this area a lot and confuse things. It can take me out multiple times before getting a true move. So I like to just get in a sell, then I will watch and manage my trade accordingly to what I see. And as you can see here, price pushes down, then bounces off the Asian session high and the previous day New York Open. So this is a bearish confirmation to me. It's retesting the New York Open and then continuing towards the downside. So that would be a sell move like that. And by this time, you'd move to break even and then manage your trade. Price goes all the way down. By this time, you probably would have moved your stop loss a bit lower. And then by this time, clearing this low, you are taking another major liquidity pool. So this would be, well, it's just that low really. It's the pre-New York low. So taking that low is a major liquidity pull, so you would have taken partial profits down there. You've made it all the way from up here all the way to the other side in a short amount of time. So you wouldn't really need to take much more than that. You've got that upwards move, you've got that sell from down there, and it's come back into the discount buy area where they then start buying again towards the upside. But you don't want to stress things and overtrade. So that could also be a buy, but you would risk less because you've got that downwards move, you've got that upwards move, and all it's doing is giving you fake outs in opposite directions. Then it uses these levels to build that bullish power towards the upside. So this currently is still bullish towards it to target previous highs and continue up. And all they've done, US on holiday, US come back, they push price down just like they had on Friday and continued buying. So this is buying power, this is buying power too, and that's likely to continue towards the upside going into tomorrow. But obviously that doesn't need to be right because you've already managed your trade. You focus your time on a specific area and you look for specific confirmations that normally show. And that's all we do. These previous few days, you can see this exact same setup is happening here. New York Open, New York Open, here, up here, up here. It's either the pre-New York or the New York Open it happens. So all you got to do is focus on those times and you will get the best possibility to catch the big moves. Message me if you've got any questions. Hopefully that's hit clear. Got a bit excited towards the end of that. Take care. Goodbye.